Hello, folks. It is Tuesday, August 1st. It's about 1 o'clock in the afternoon on the East Coast of the United States. In this video, I'll be talking about the Bank of Japan and its yield curve control policies and how that has changed over time. This is really a look at the bubble economy in Japan and the numerous monetary experiments, or you could look at it as one big experiment over the last 30 years. And why do we care? Well, in my expectation, the yen will be the first major fiat currency to fail. Don't know when that's going to happen, but when fiat currencies start failing, I believe that the yen will be the first one, the first of the major fiat currencies. Actually, I think the Turkish lira will fail first, but that will be an isolated event to Turkey. Outside of Turkey, nobody's going to, well, people will care, but it won't have a great effect outside of Turkey. When the Japanese yen fails, that will have wide-reaching effects across the planet. Because Japan has kept their interest rates so low for so long, the carry trade, if you're familiar with that term, has been profitable for several decades now. That basically you can borrow money at 0% in Japan and then go invest that money elsewhere. You know, for example, right now you can get 5% on treasuries here in the United States. And so, you know, you pocket the difference between the 0% you borrowed the money at and the 5% you're getting paid in interest. And so anyway, collapse of the Japanese yen will be significant. And again, what Japan, the Bank of Japan, has done with their fiat currency over the last 3 decades, it's the best example we have of what you can do with a fiat currency as far as manipulating an economy. And I suspect we will find out how far you can push those policies of manipulate, printing a fiat currency, creating money out of thin air and using it to prop up the economy, stock market, real estate market, etc. So one of the measurements we can look at in an economy is the debt to GDP ratio. And it's an indicator, or believed to be an indicator, of the default risk for a government's debt. And obviously, if a government's debt collapses or they default on that debt, that ripples through both the economy and the financial markets. And so here's Japan's debt to GDP ratio. Currently, it's up over 260%. Of the major economies, Western economies, this is the highest debt to GDP ratio, which, again, that supports my belief that the Japanese yen will be the first fiat currency to fail, is in part because their debt to GDP ratio is so high. And then this 77%, that's a marker, a level that is believed to be, this is danger. Anything over 77% is considered to be dangerous. And so now let's look at, there's Venezuela, they're number one. Yay, we're number one at 350%. There's Japan at number 2. And again, first of the major economies, Japan has the highest debt to GDP ratios. Venezuela, yes, it's higher. Do we care? Only if you're a Venezuelan. The next country of interest, there's Italy. Italy's economy is a mess. They're at 156%. And then here's the United States at 128%. And so, notice that we're well over the level 77%, which is considered dangerous. So let's look at some history And this is the first time for me kind of digging into the history of Japan's economy and the Bank of Japan. And I'm not an economist, I'm an engineer. And so all of this is based on the research that I've done. If I'm wrong, please correct me or point me at resources in the comments below this video. Love to hear what you have to say. So anyway, my understanding, the Bank of Japan created a bubble 1986 and 87. They cut interest rates pretty quickly from 5% to 2.5%. So in less than 2 years, cut interest rates in half. That's a significant change. They also started printing money, expanded the printing of money. They'd been printing money for a long time, but expanded that printing. And then as a result, the stock market and the real estate market bubbled up. Not long after that, the Bank of Japan popped the bubble economy. In 89 and 90, they raised interest rates from 2.5% to 6%. So cut from 5 to 2.5 in 2 years, and then in the same period of time, more than doubled, went back to 6% interest rates. And so that was enough to pop the stock and real estate bubbles that they had created, and it resulted in the lost decade. You'll see economists refer to the lost decade in Japan, and it was the 10 years after this popping of interest rate, or raising the interest rates that popped the bubble. It's really been 3 lost decades that Japan's economy has never really recovered from the 1990s. And we'll see that in some of the charts. Well, here's one of the charts. So here's blowing the bubble. They cut rates from the 5% down to the 2.5%. Not long later, they popped the bubble by raising rates from 2.5% back up to 6%. That kicked off a serious bout of deflation, and Japan's economy has been basically in a deflationary state ever since. And if you're in a fiat debt-based economy, deflation is the last thing that you want. It's hard to play the Keynesian fiat money games when your economy is deflating. That's why when you see the central banks talking about, blah, 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 we're targeting 2% inflation, blah, blah, blah. They need inflation. That's part of their model. And so when you get deflation, your model falls apart. You're not able to play the Keynesian games with your fiat currency. And so Japan has been fighting deflation for 3 decades now. And that's why we can talk about it's 3 lost decades, not just a single lost decade. So anyway, this is the central bank's interest rates have essentially been zero since, 2000. So for the last 23 years, interest rates in Japan have been at essentially zero. That's been their target level, has been zero. In this chart, we're looking at M0, the money supply. That's basically bank-created money. This is, 86 to 87 when they were blowing the bubble pops, but notice that they never stopped creating more money. I mean, that's what central banks do, is they're constantly creating fiat currency. And we can see that the rate of money creation has changed over the years, basically gotten steeper at periods of time. We've had several periods of quantitative easing in Japan. There's 2 chunks of quantitative easing, and then in 2013, Abe, This was one of their finance ministers, central bank, whatever they call their central bank guy. Anyway, it's referred to as Abenomics, and he introduced QQE, and so this is quantitative and qualitative easing. Basically, it's quantitative easing on steroids, and we can see in the money supply that the creation of money dramatically accelerated during this period of QQE. Another policy that Japan implemented in an attempt to fight deflation, create inflation, they went directly into the stock markets and they started buying ETFs and buying REITs, real estate investment trusts. And that policy started in mid-2010 and continued through 2020. So 10 full years of the central bank actively buying ETFs and REITs. By mid-2016, Bank of Japan owned 40% of the government bond market. As of April of 2022, the central bank owns 80% of all the ETFs in the stock market, 80%. And that represents 7% of the overall stock market. So the Bank of Japan just outright owns that much of the stock market, which, pretty amazing. And so here we're seeing that. This is the Bank of Japan's, their asset book. We could see the dramatic expansion. This is during Abenomics. Excuse me, that was a text message coming in. Quantitative or the QQE, quantitative and qualitative easing, started back here in 2013. In 2016, this is where they implemented yield curve control. So they still, by 2016, so remember the bubble popped in 1990, and here we are in 2016, and they still have not been able to create a consistent level of inflation. Remember the 2% target. And so they implement at that point yield curve control, where not only are they printing money and playing with buying stocks, ETFs and REITs, they're going to directly control interest rates or try to, again, in an attempt to create inflation. But anyway, here we're looking at the Bank of Japan's, their asset books. We can see how it dramatically expanded during these periods. These are recent years. Let's keep rolling here. This is the Nikkei, the 225. This is the stock market, Japanese stock market. There's the bubble inflated up into late 1989, and then the popping and steady decline in the stock market for years. That's 1990, that's 20 years. So 20 years of mostly decline in the stock market. Here in 2010, they kick in their ETF and REIT buying program, start to get some traction, inflating the stock market. But, again, as an investor, this is all manipulated. This is the central bank buying stocks, buying ETFs and REITs. Again, they've bought 80% of the ETFs on the market to cause this to occur. And so, how comfortable do you feel investing in Japanese stocks? And of course, most people aren't paying enough attention. They don't realize that all of these monetary and financial shenanigans, machinations are going on. They're going to work every day. They're trying to raise their family and pay the bills. And they've got their money going into the retirement program. They don't realize what those retirement programs are based on. So Here's a look at, this is residential real estate. The bubble occurred in commercial real estate as well. Here's the bubble inflating into early 1990s and then deflating again, long period of deflation, 20 years. The 1990 down to, there's 2010, steady deflation in residential real estate, finally got some traction and some uptick, some increase in real estate values. Now we can look at, this is yield curve control, started in 2016. They were targeting negative interest rates. I think Japan was the first or one of the first countries to target negative interest rates. This was on the short-term rates, implemented a 0% target for the 10-year note and allowed for a 10 basis point band, plus or minus, around the 0%. In 2018, they expanded the band to 20 points. 2021, they expanded the band to 50 basis points. 22, oops, that's a misprint. That should be 25. In March of 2021, they expanded the band to 25 basis points. And then in 22, they expanded it to 50 basis points. So my bad there, that should be 25 basis points. This chart, we've looked at this in other videos. This is the yield on the 10-year bond, the Japanese bond. And like the other Western bonds, we got a long-term downtrend in interest rates, and that's what we see in this channel. In the U.S. Treasuries, that was a 40-year downtrend in interest rates. It wasn't as long in Japan, but we see a long-term downtrend in interest rates. Got them down to, in the U.S. Treasury, the 10-year note, we got down to about 0.5%. In Japan, they actually got down into negative interest rates before they got a climb. In December of 21, this is when Evergrande defaulted. Evergrande is a Chinese real estate development company. They defaulted on $300 billion in debt. And in my opinion, this was the trigger for the collapse in the global debt markets. And so all of the debt markets show a change at this point, December of 21. I think in hindsight, this will widely be acknowledged as that was the trigger. In March of 22, this is in the U.S. Treasuries, the 10-year, March of 22, this is when the 40-year downtrend ended in that instrument. And so we see, I've indicated that on this chart as a reference point. September of 2016, that's when Japan implemented yield curve control. I'm guessing that they saw that they weren't having any luck holding interest rates at zero or below zero, and decided to directly go into the bond market and attempt to control interest rates. And that's why they started yield curve control. You can see in this Andrews pitchfork how, interest rates bumped into the median line as resistance, finally broke through, and then this is in late 22, broke out strongly and is now bumping into the upper median line of this Andrews pitchfork as resistance. Actually, last month pushed up to that level, and it appears that, here's August, that little blip there, that's the start of this month. We may be getting a break above this median line. So, and that would coincide with the recent change about 4 days ago, the Bank of Japan relaxed their yield curve control policy yet again, and we'll see the details of that here shortly. This is, again, the yield on the 10-year Japanese bond in the weekly time frame, and it just zooms in. These are the different points where they changed the band around 0%. Notice that throughout this time period, they're still targeting 0%. They weren't able to maintain it. But at the upper bound of the target, they're actively going in and buying bonds in an attempt to maintain that yield curve control. And so that's what we see here. When the target is plus or minus 25 basis points, they're buying bonds, directly going into the market and buying bonds with, of course, printed fiat currency to maintain that upper boundary on interest rates. When they relaxed the boundary to plus or minus 50 basis points, now they're buying bonds at 0.5%, the 50 basis points. This July of 23, this is their recent change. They relaxed the yield curve control, and notice that rates have quickly popped above their previous range. As best as I can tell at this point, this recent change means that 1% is the new cap, but there's some ambiguity about that. I don't think anybody's really sure what this latest change really means. Some of the language they talked about, instead of having strict limits, we're going to use the band as references, whatever that means. But notice that they're still targeting 0%. Their objective is to target 0% on the 10-year note. And I haven't pointed out yet, but what's interesting about the BOJ's monetary policy is that they are trying to maintain easy monetary policy while the rest of the Western world is tightening. We're up to 5.5% now in the U.S. interest rates, and here's Bank of Japan still trying to maintain 0%. So big difference between Bank of Japan and the rest of the Western world. But again, Bank of Japan has had 3 decades of fighting deflation. So, and not having much luck with it. Now we're down in the daily time frame, again looking at the yield on the 10-year bond, and we can see that since they made their latest change, interest rates have popped up above, that was 60 basis points or 0.6%, and last 2 days have been above that level. MACD is in bull mode on a buy signal, energy very elevated. And so, it appears that interest rates want to go higher. And of course, traders, they're always looking for how can I make a buck? And so they're going to challenge the Bank of Japan, test them basically, and try to make a buck in the process. And so, traders are actively in here working on making a buck at the expense of the Bank of Japan by driving interest rates higher. So now let's look at gold, and of course that's the topic that I really care about. This is gold in yen, so priced in the yen, monthly time frame. We can see, these periods of quantitative easing and qualitative easing, how the price of gold rose steadily higher. If we looked at the expansion of the money supply, the price of gold basically corresponds to the expansion of money. You know, they're printing fiat currency, the price of gold is going up, which is, you know, that's not surprising. And so anyway, gold in the yen has been making a series of new all-time highs for years. It's just continually making new all-time highs. If we look at gold priced in the yen daily time frame, we can see that corresponding to this latest change in yield curve control policy, gold has popped up above this recent band and now appears to be headed higher. MACD in bull mode on a buy signal, energy very elevated. So this is a bullish chart for gold priced in yen, moving averages in bullish alignment, although I would point out that the 50-day moving average is quite a ways above the 200-day moving average. And so, you know, it wouldn't be surprising to get a correction, but we just don't see corrections in gold when priced in yen. We don't get big corrections, and I would suggest it's because the Bank of Japan is just, they're so active manipulating the monetary system, the economy, their financial system, continually printing fiat currency. It doesn't give gold a chance to correct. And so, you know, what's more likely than a correction is just more sideways action at a high level. So that's all I've got in this video. This has been interesting for me to dig into Japan's monetary policy, economic policy. I'll probably be looking at this further in the future. Again, I expect that the Japanese yen will be the first major fiat currency to fail. And of course, we'll all be around to see that happen. So I'll talk to you in the next video.